Hey, Charlie Mattingly here with Leading Edge Financial Planning. Today, I wanted to share with you just some thoughts about the Southwest Airlines healthcare plans. Mainly today, we're going to talk about the regular plan and the health savings plan. I know this is a hotly debated topic. Possibly it's like politics and religion. I remember being on the crew van and everybody going back and forth about which is better. So I'm going to try to get some objective information out today and just kind of share who might benefit from the regular plan and who might benefit from the health savings plan. I'm not going to cover the other two today, the Choice Plus and the Choice C plans. You'll have to look at those separately and depends on the health needs, of course. But first, let's start with the regular plan. Clearly, the regular plan is free, low cost, very low deductibles, and very inexpensive. So that's kind of the good things about the regular plan. I think one of the things it does not cover preventative healthcare, whereas the other three plans do. The other three on the benefits plus plans are the Choice Plus, Choice C, and health savings plans. Those cover preventative health. The regular plan does not. One of the other things about the regular plan that is very important to know is that you are limited to a maximum of $200,000 of life insurance on the regular plan. So make sure you have non-Southwest life insurance available to you. Already have it if you're going to be on the regular plan or select it. That's a big deal. I've known people to transition to the regular plan, lose the life insurance that they had purchased, did not have enough outside of Southwest, and then have a medical issue like a heart murmur or something like that that prevented them from getting future life insurance. So that's something to think about as far as the life insurance component on the regular plan. Otherwise, who might the regular plan be good for? I think it works really well for our retired military people that are on TRICARE. It seems to pair up nicely with the regular plan and TRICARE. I think that also probably depends on where you live, what your medical needs are. The regular plan also works well for folks that may have chronic medical conditions that are ongoing, known medical situations, maybe known medication needs that are ongoing. So I think it could be good for those situations as well. And I think those are the things I wanted to highlight on the regular plan. Let me check if there's anything else. Okay. So I think those are things. Again, low cost, you don't have to spend much, and those are all good things, right? So the health savings plan is kind of the polar opposite of the regular plan. And the idea behind the health savings plan is that there is a component of self-insurance involved here. In other words, the deductibles are higher. That's the definition of a health savings plan, is that the deductibles are going to be higher. So you are self-insuring for those smaller costs. Therefore, the premium is lower than your typical healthcare plan. In general, the health savings plan is good for people that have a sufficient emergency fund already set up. There's margin in their cash flow. In other words, you have sufficient cash flow needs such that if a medical surprise would not ruin you financially, and again, we'll talk about max out of pockets in a second, but basically it also is good for those that are relatively healthy, where maybe you don't have any ongoing medical needs. You don't go to the doctor's office very often. Of course, we don't know when we could be surprised. I was injured on the health savings plan unexpectedly and had to have surgeries that were very expensive. So I know what that's like. If that, though, is the exception in your life, and you're mainly healthy, usually maybe just some preventative things that come up for you and your family occasionally. So the health savings plan, that might be who that fits. Okay. So let's talk about the deductibles. I'll just kind of focus on the family stuff here. The family deductible is $3,400. So you're going to pay for everything until $3,400. And so that's one of the reasons why I said you need to have cash ready to go for some of those small doctor visits, for maybe the flu to the clinic or something like that. So that's something to be aware of right off the bat. Then Southwest, once you meet the deductible, you're going to split the cost with Southwest Airlines, they're going to pay 80, you're going to pay 20, all the way up to your maximum out of pocket. I did forget to mention that this footnote here, number 2, says that the family deductible must be met before any family member begins receiving benefits. One family member or multiple family members may meet this limit. So that's a good thing. And then we'll get down here again. Then you share costs with Southwest Airlines, 80%, 20%. Max out of pocket for a family is $12,000. And that's if multiple family members are having things going on. Now, the footnote here is important. Footnote number 3 says, if you enroll in family coverage in the health savings plan, there is an individual in-network out-of-pocket maximum of $7,350. And then this maximum is the most that would have to be paid out of pocket for any covered individual in the family. But if there's multiple family members that are having medical issues, then it's going to be $12,000 maximum out of pocket. So that's quite a big chunk. You can compare that to the $8,600 on the Choice Plus plan. The Choice C plan is $9,600 in network. Clearly, you don't want to go out of network on any of these plans. So those are the basically the moving parts of the health savings plan. The health savings plan premium for a family, the most expensive is $55 a month. Okay, so those are the numbers that you need to be aware of. So again, why would I pick the health savings plan? I might pick it because I'm healthy, relatively speaking. I don't go to the doctor that often, except for the unexpected injury that could occur to any of us. I don't have any ongoing health issues. Now, the benefits, if that profile fits you, when we make this decision between the regular plan and the health plan, or any of the health plans, but health savings plan in this case, think about your healthcare needs first. That's the number one thing that's going to drive this decision, not tax benefits, not saving, et cetera, your health needs. Okay, if you fit the profile, again, let's say of the health savings plan, then the other benefits could be tax savings. So in 2024, the tax savings, the IRS increases the limit every year. I think it was $7,750 for 2023. Southwest Airlines gives a family, I think, $300 plus or minus 50 if I've got that number right there. They give a family that much, and an individual about half of that much goes towards your health savings account. So you get to save the rest, and that is pre-tax money. So now this is where the good stuff happens on the health savings plan as far as saving money. And if you contribute the total of $8,000, let's say for 2024, there is also, if you're 55 or older, there's a $1,000 catch-up contribution. So you can contribute, again, if you're under 55, $8,000. If you're in the 32% tax bracket, that could save you $2,400 in taxes, or a little less than $2,000 in tax savings, about $1,900 if you're in the 24% marginal tax bracket. So that's pretty nice. That's a good, healthy little tax savings every year. What I do, I've used the health savings plan before, and I'll use it now, even though I'm not at Southwest anymore. I save that money every year, maximize my health savings account. It's just like a bank account if you want to use it. I don't actually use it unless there's a major expense that comes up. If my kids go to the clinic and they have the flu, I just pay out of pocket, out of my own, from my checking account or whatever. That cost does go towards my deductible, but I just keep my receipt, scan and put it in a file, and keep those receipts for future purposes. But I just go ahead. My goal is to let that health savings account accumulate money. I can invest everything above $2,000. I actually leave about $4,000 in cash just in case something comes up. I invest the rest of it, and it grows tax-free. So the health savings account is the only account in existence that is tax deductible on the front end, lowers your taxable income, lowers your tax bill. You can invest and it grows tax-free. And if you take the money out of your health savings account for healthcare expenses, they come out tax-free. So that's the only one with triple tax savings there. The other rule there is at age 65, if you decide to take money out of your health savings account to buy a car, which you wouldn't do actually, but if you did that, the money would be taxable but not penalized after age 65. That's important to understand there. Otherwise, if you take it out for non-medical reasons prior to 65, it's about a 20% tax penalty. So you would not want to do that. The reason, though, I said keep your receipts on the health savings plan if you pay for it out of your own pocket is that if you have those receipts, there's no time limit. 10 years down the road, I could go reimburse myself for all the receipts that I've accumulated. So if for some reason I needed the money or I wanted to pull that out for whatever reason, I could just make sure I have all my receipts, throughout the years, reimburse myself for that amount, and it's tax-free. So that's kind of just something to think about there. Remember, though, let me back up a second and just emphasize the reason you pick a healthcare plan is because your health needs match that plan. Remember, if you've got some ongoing things with health, maybe some medications, or you're on TRICARE, the regular plan may be a good fit for you. It's very low cost, low deductibles. If you rarely go to the doctor, relatively healthy, you've got sufficient cash flow, emergency funds, and you want to save an extra $8,000 a year and reduce your taxes, the health savings plan could be good for you as well. So those are some things I hope help make that decision and take the emotion out of that. Some people think that Southwest Airlines does not want you on the on the regular plan. I have no idea. The regular plan has been known as the mafia plan, where it's kind of kept secret, and Southwest may not want you on it. I don't know if that's true or not, but that's not why we want to pick a healthcare plan, is whether Southwest wants us on it or not. You want to pick it because it fits your healthcare needs. So I hope that helps. Remember, we're not associated with Southwest Airlines or SWA in any way. These are the opinions of myself at Leading Edge Financial Planning. You're welcome to give us a call or email at any time. Charlie at Leading Edge Planning. My cell phone number is 865-328-4969. You can call me there if you'd like, or text, and I'll try to answer any questions that you might have. Just give you objective, unbiased information so you can make the best decision for you and your family. Thank you very much, and have a great fall open enrollment season.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.